What's going on, everyone? Adam Swartz here. On today's video, I'm going to talk about Riverside housing market update for the month of April, especially talking about the tariffs and what is that doing to the housing market. So stay tuned. If you have any questions, comment below. We'd love to answer all your questions. So we are going to talk about where the housing market is in Riverside for the month of April. I want to show you charts and show you exactly what's going on based on the numbers and not just what my thoughts are doing. So here's a chart of the housing numbers when it comes to medium home price in Riverside and average single price. We've obviously seen dips going down since the start of the year, with everything going uncertainty, with rates staying up higher, the Fed not cutting as many rates as everyone thinks, and now with the tariffs happening, a lot of things that are making a lot of buyers sit on the sideline. And then two, I also think with inflation continue to go up or stay hot longer than we were expecting, we have a lot of buyers sitting on the sidelines that are just don't have the money to do it. The other reason we're seeing a lot of houses sit on the market right now are sellers are extremely overpricing their houses. I mean, we're putting a house on the market right now in Orange Crest for $875, and on the same street, a house smaller than ours, and ours is bigger and better with more bedrooms, is listed at $925. So we have a lot of sellers sitting out there trying to get top dollar. And buyers are just not going to do it with rates are at where they are. So we have seen a dip in prices go down. We have seen rates drop in the last 2 weeks. So I wouldn't be shocked going into the summer months. We're going to see prices continue at least flatten out or continue to go up a little bit. This chart right here is days on market, medium days on market. So if you put your house on the market right now, it takes roughly 26 days for it to go into escrow. This number is always skewed a little bit based on how the MLS reads days on market. Reasoning is if I have a house on the market and I put it active under contract, it's still counting days against my house, even though I'm in escrow. Or if I put it pending, then it doesn't count my days anymore. So it's really hard to actually know what the average or the medium days on market is in any market based on the MLS, just because the numbers are skewed. I would say if you price a house right in this market, you should have an offer in the first 10 days. You know, you might only get one offer, but you should have an offer in the first 10 days. This is why I'm saying there's a lot of houses just not selling. This chart right here is showing that 98% of 0.7, so 98.7% of houses are selling at or below their list price. So if I list a house at $1 million, I'm selling that house at $980,000 and some change. So we're almost still getting full ask price right now if you price the house correctly, but definitely not what we were seeing back during during early 2024, and definitely not in COVID, where we saw home prices going for like 105 on average over asking price. So we're starting to see a normal flattening out of the market. This right here is a chart of active listings in Riverside. So I want people to start realizing of what it really looked like back in 2008. So this chart right here is all the way back from 2008. That's the farthest our system will go back. We had over 4,000 houses on the market in Riverside. And currently right now, last month, we only had 542. I actually check every Monday. And this week we had 462 listings. So I want people to realize what we saw back in 2008, we would be 10x the amount of houses we have in the market right now. So if you live in the Riverside area and you're starting to look around and see for sale signs, imagine how many for sale signs you did, but times it by 10. And now that's definitely a big reason why we saw so many home prices drop by so much, because we just had so much inventory in the housing market. Right here is something that a lot of people don't want to think about. And if they don't pay attention to housing markets, they really don't know that this is really how it works. So we had rates going up. Why did we have rates going up? We had rates going up because the market was hot. And so the Fed raises rates up because to try to cool down the market, to kind of slow down inflation. And so when the market's hot, a lot of investors go put their money in better assets, right? The stock market, better returns in the market than what you would get in the 10-year bond. Like the 10-year bond has been anywhere between 4 to 5% in the last year or so. So if I think I can get a better return on my money than in bonds, I'm going to go put in the stock market. But when times get tough, when times get tough and things get scary or unsure like they are right now, a lot of people rush their money into solid assets, and the 10-year bond is a very solid asset. It's backed by the U.S. government. They've never missed a payment. And so what the thing that people been asking for, I'll wait until rates drop. I want you to show this chart back to since 1975. These little gray areas right here that you see. So we had 1, 2, 3, 4, 5, 6, 7. Those were all recessions. And if you look at what interest rates do in recessions, they go down. So in 70, right, early 70s, we had one go down. We had this one go down in the 80s. This is when we had Volcker go to 17%. Then was in the early 90s. This was the dot-com burst. This was the housing crash. This was COVID. And so what I want you to see is everyone's been wanting mortgage rates to come down so they could buy. But the only time we have mortgage rates come down after they've gone up is after we have a recession. And so the one thing that these tariffs are going to do, and we've already seen it. Let me go to my next slide. We've already seen it is is making people rush to the 10-year bond because it's a more reliable investment. And so that's bringing the yields down. And so if that comes down, mortgage rates are going to go down. So even though we're starting to see people say we're going into a recession, we're losing all this money in the stock market, things like that. Yes, that is true. But what that is going to do, it's going to bring housing mortgage rates down. And so if you're sitting on the sideline and you don't have money in the stock market, then this doesn't really affect you that much. It's actually going to be a good thing, these tariffs. Not that it's going to cost you more money to buy things, because that is going to happen. But if you're not losing money in the stock market, and you're actually now gaining buying power to go purchase another home. And so you have to just figure out the right time for you to jump in. And the big thing I would give the advice to someone who's a first-time home buyer is be less picky on what you're trying to buy and go look at houses that have been sitting on the market for a while and start putting some offers 20% below asking price, 10% below asking price. Because even though a lot of people are freaking out, this is when you can get a deal. Do I know if housing prices are going to go down this year? Well, the only time we've seen housing prices go down was in the 2008 crash. And we go back to why we saw them go down. We had over 4,000 houses on the market. So we had over 4,000 houses on the market. We had a lot of people losing their jobs and no one had money. So we had no buyers in the pool. And so that's what brought the market down. Do I think we have a lot of buyers sitting on the sideline? I would say we have a lot of sellers that are ready to downsize. I have a lot of older clients wanting to sell their houses, but they have a 3% interest rate and they're on a $2,500 a month payment, and they're on a fixed income and they can't afford $4,000 a month. Well, if their mortgage now comes down to, say $3,000 a month, maybe that's something they could swing. And so we should see interest rates go down. And if we go into a recession, we will for sure see mortgage rates go down. Does that drive prices up? I'm not sure. It's really going to matter if we have a lot of job loss. If we have rates go down and we have massive job loss, then we'll probably see housing prices go down too, or at least flatten out. I don't see them going up because supply and demand, we're not going to have buyers coming into this market. And so what everyone was waiting for, mortgage rates come down, we're going to have a recession. If you go back, that's 50 years. If you go back for the last 50 years, every single time that rates went down, it was because of recession. And so the bond market is telling us right now, they think we're going into a recession, which we might be going into a recession. It could be happening, but it's definitely going to free up mortgage rates. And so what I want to tell everyone, if you're thinking about selling your house and you have a good reason to sell it, right? Make sure you price correctly. Make sure you work with a good agent. Make sure that you don't overprice it. If you overprice it, someone will not buy it. Be okay giving repairs. Be okay giving credits. Those are things that you're going to have to give. And if you're a buyer, make sure you get qualified. Even if you don't see a house you like, get qualified. See what you qualify for. And if the right house comes on the market, because if prices go down in the next few months or the few years, I would say you need to hang on to your house more than 2 years. Like if you're thinking about like moving in 2 years, don't buy a house. If you're thinking about buying a house and keeping it for a while, then do that. Definitely do that. So those are my 2 cents. If you're losing money in the stock market, I'm so sorry to hear that. Mortgage rates have gone on and down in the last week. we are seeing more houses sit on the market, but I would say they're sitting more on the market because sellers are allowing to be overpriced. Everything I'm seeing right now that's priced correctly are still selling um, every single day. We sold 52 houses last week in Riverside. That's above our average, but out of that 52 homes, 24 of them sold below asking price. So that's what I'm trying to say. Like, you might only get one offer, and buyers know that they have a little more leverage than they did have when a few years ago when they had 40 offers. And remember, sellers decide if a house sells and buyers decide what that house sells for. So hopefully this video helps. If you have any questions, please reach out to me. If you want to jump on a call, buying and selling real estate is very hard. Every person's situation is different. That's why it's so important to work with someone who's, I've sold over 385 houses, over 200 million in real estate. We've seen a lot of things. So you need to work with a true professional right now to make sure that they say what's best for you and not what's best for them. So hopefully this video helps. And until next time, guys, peace.